Good morning. It's Friday. It's PCE day. It's also the day after earnings of Microsoft, Google, Snap, everything. Big news on inflation. It's kind of sticky. It's not going up. It's not going down. So what that means, market pulled back a little bit. It's coming back a little bit more. Nothing crazy. Nothing happened. Jim Cramer said, well, I wouldn't trade anything until we see that PCE number. Well, douchebag, you missed out on some really good earnings plays. Yes, Meta was down. It was a buying opportunity yesterday. Let's look at the Qs. Here's the first thing that I want to say, though. If you're listening to me on Spotify, please rate me 5 stars. I went down to 4.8 for something. Some douchebags are doing like 1 stars, and it's bringing me down. So, I don't like looking at that. So if you are listening on Spotify, scroll down a little bit, and there should be a 5-star thing. On Apple Podcasts, it's a little bit harder to rate, but if you're listening on Apple Podcasts and you can figure it out, go ahead and do it. I think I have a YouTube video on how to do it. I can put it in the newsletter. But if you're listening on Spotify, just please go over there and do that. Here's the Qs. There were 428. We had a buy-in here at 426 on Tuesday, I think it was. No, it might have been Wednesday. But either way, we went down lower. But you're hovering around that 200-day. Now, this is what I've been worried about, is the weekly. Where are we on the weekly? Well, we started out this week. We opened up at 417. We're at 428, so you're up. Have you turned around? No. This isn't a full turnaround. This is just a candle that hasn't even gotten to the highs of last week. The highs of last week are 442. You're at 424. So the highs of last week are 442. This does not constitute a turnaround. You still don't have confirmation over that 9-day on the weekly. Yes, I'm still concerned. Yes, this button hook looks like it's happening. Yes, we have broken further under. This is the one that I like to say and like to point at back in July 2023, where it took us all the way down into October. We still had confirmation on many of these weeks. We don't have confirmation on this week. This could be the pullback that they said, but buy the dip. I've gone over it many times, and I'll say it again. Buy the dip means you add to things that you like here. Doesn't mean I'm going balls deep on everything. It means just start adding, because you don't want to wind up going balls deep and then having us go down to a support level like 410, 400, and even this big volume shelf right here at 369. You don't want to add and go balls deep there. Yes, I added a ton on Microsoft. Yes, I am benefiting from that. Yes, I added Meta. I am down on that one, but that turned out to be just a buy again because it almost came completely back. But my point is, just be careful about it. Understand what your goals are. Understand that you have a strategy. Understand everything of that sort. And just be smart about it. Because, this inflation, it's not coming down. So we're going to have to rely on the consumer. And I will go over the consumer in a little bit. I'm slightly concerned. I took the consumer, the U.S. Treasury 10-year against the retail sector. And you'll see, looks like a divergence. The consumer may be getting squeezed, so take it a little slow. Let's talk about Trendspider. You got a video here on market breadth symbols, and if you want to turn around, they also did a blog post. Seamlessly integrate breadth data with market breadth symbols. You can find the turnaround. Unlocking potential with market breadth. This is what's really, really good. So Trendspider just keeps getting better. Absolutely keeps getting better. And if you're interested in it, I think this one could be the thing that triggers you to buy. If you're going to buy, they're having a sale, and it is $1,000 off, $1,088 off. Use my link in the link tree, which is down below. It's $58 a month. You get my 4-hour algorithm. You're going to have to email me. Understand I'm having some problems, so just take a screenshot of your payment, send it to me on email. I'll send you back the welcome letter. I'll work it out on the back end with Trendspider so that you get the updates, everything of that sort. But understand, I think Trendspider just continues to get better. I did find this interesting yesterday. Dan Ushman is the CEO of Trendspider, and he does a great job of it's his real life, it's his personal account, doesn't view, he says, hey, these aren't the views of Trendspider, but it is his personal stuff. And Dan's a little bit younger than I am, but I kind of went through the same journey, and I thought it was important to bring up. So Dan said when he first started trading, I stuck to the 5-minute charts. I stuck to 1-minute charts, and I could do it. Then I moved to 5-minute charts. He then moved to 15. Then to 60, then to daily for a long time. Now it's rare that he'll look at anything shorter than a weekly. The shorter the time frame, the more random the walk. I think that's a great observation. This market in particular, and again, I think there's somebody, Shep, I think, had commented on Spotify that he's sick of these market downturns. Well, the market is volatile. If you're looking at it on a daily basis, it's volatile. If you're looking at this on a weekly basis like this, you can kind of see the trends clearly. It's super, super clear where the trends are. And you can see these downturns. You can see the button hooks. You can see them pulling back. So the Bollinger Band cinching up for the next move. Look at these Bollinger Bands in October. It was clear we were going somewhere. Now, I didn't alert you on October 23rd. Oh my God, we've got to go all in. I alerted you on October 30th and the first week in November. I'd go all in. We have confirmation over this 9-day. This was a great move. I am warning you about this one. This may be the October 23rd, where again, next week we're up and we move to a higher realm. Right now, I'm a little bit concerned with some of the things that we're seeing, inflation being sticky, no rate cuts, and the consumer may be feeling a little bit of pressure. I'm feeling a little bit sticky. So I'm just warning you, and I do think Dan has a great point, is that you need to look at different time frames. And as I get older, it's a lot harder for me to trade on those smaller time frames. NASDAQ futures lead S&P Dow on the Microsoft PCE data also arrives. A great article if you want to read it about everything. The biggest movers of the day, Google, Microsoft, Snap, and more. You can read all about those. Here is the stuff that I posted yesterday. I find it interesting. The U.S. Treasury rate has been increasing. On April 1st, it really had quite a divergence. And we can look at this particular photo is what I want to show. This is in Seeking Alpha. And if you have Seeking Alpha Premium, you can do this too, the U.S. 10-year Treasury. I did it from the beginning of the year. Look at what happened on April 1st. Okay, the 10-year started rising. Look at what happened to the RTH, which is the retail sector. We started moving down. So I said, okay, what are some of the retail stocks that I own or that I recommend and I've looked at? Well, Ulta, down 22% since April 1st. Elf, down 7% since April 1st. That's the beauty category. Go to cars. CarMax, down 18% since April 1st. Walgreens down 8% since April 1st. Tapestry, which, again, it's clothing. You could find some that went up, but I wanted to point out there's a lot of pressure on this retail sector, and that is the consumer spending. So it's an interesting look at these things, and I think it's important to take a look. Now, I also want to point out something that Seeking Alpha sent an email out this morning. And they said earnings season is in full force. Some of the biggest tech names posting results, including AlphaPix Meta platform, which has returned 44% to the AlphaPix portfolio. AlphaPix is fantastic. This is earnings season in high gear. You can read all about it. This is it. 11 AlphaPix stocks reported strong earnings in the last 48 hours. 11 of them. They'll highlight all of them in this article. Monthly AlphaPix identifies the two best of the best strong buy quant recommendations through rigorous quantitative analysis, and 5 out of the 36 AlphaPix have delivered returns over 100%. Since the inception of AlphaPix portfolio, total return has delivered an incredible 116% versus the S&P 33%. So I wanted to point this out because AlphaPix is on sale. You can get it. Go to the link tree and you'll see it here. AlphaPix, want to beat the S&P right here. AlphaPix is on sale, $50 off, $449. You can see it right there. You get 2 data-driven stocks each month. I will give you the latest one that they sent out, which was the 15th of this month. It was GCT, Giga Cloud Technology. I personally bought this one. I know a lot of my listeners have alpha picks. The $449, yes, it seems extreme for 2 picks. But the reality is this is for somebody who doesn't particularly want to do a ton of research. The $449, say you put $5,000 into say just GCT. I think I put like 10 grand into GCT. I bought it down here. I liked the analysis that I read. I'm up. I'm up. Let's see. Let's just say I bought it, I think at 32. So 32, I think it was like 32.30, something like that. I'm up 13%. I put 5 grand. I put 10 grand into it. It's $1,000. I paid that 442 in just 10 days. So again, take a look at that. It does seem expensive. $449. All you get are articles like this, which is the analysis. And each month you get 2. They do tell you when to sell. And they can tell you also, here's the strategy that they suggest. There are 3 different strategies. How can new subscribers get started? You can buy 5 of the strong buys in Alpha Picks. Royal Caribbean is one. We can go over Royal Caribbean. This one has been bucking the cruise industry, which has been kind of flat. Look at this one. Upward trajectory. 129 is where the algorithm got you in. But you want to, you could buy 5 of them. Buy the entire portfolio because you get access to the portfolio on day 1. Or just use it like I do as a idea generation tool. Read the analysis of each pick and choose which one suits your strategy. Giga Cloud, that fit my strategy. I liked it. So remember, Alpha Picks, fantastic return, fantastic analysis. For those people who have subscribed, go and read that earnings stuff. It is a great newsletter. Now, in speaking of newsletters, what I want to point out is I want to go to this weekend's newsletter because last weekend, because had you subscribed to my paid newsletter, you would have gotten this little tidbit down here at the end. I didn't mention it. I didn't think it was worth mentioning. It was a risk, roll the dice kind of thing. But I posted this snap chart. And I said one that I used to own, no longer do. I think I bought 2 shares of this just because of this gap. It wasn't a big play. I didn't want to mention it. I was just rolling the dice. And the reason I rolled the dice was this line anyway. I still have friends' kids who are exclusively using Snap. And one of the things that the kids have told me is that when they get the Snap AI stuff, which has exclusive filters and stuff like that, their friends all get jealous. And their friends subscribe. Well, what's Snap doing? Snap is saying that they've got an increase, 18% revenue growth in the current quarter. Stock rockets 25% after hours. Right now, Snap is up. Let's see, it was up 2.69. It's at $14.20. Has it filled the gap? At $14.20, we have not filled the gap. Does the gap get filled? Maybe. This is one with the TikTok ban. I think this one may actually be better. No kid wants to go on Facebook. No kid wants to go on Instagram. That sucks. They want to be on Snapchat, and it turns out they're spending money. And so I think it's going to see some interesting stuff. Does it get back up here to 17? That's a pretty big valuation. And we can look at the quant. This is the second thing that I want to point out. If you are somebody who doesn't want Alpha Picks because you don't want to be told exactly what to buy, but you want to do your own research, Seeking Alpha Premium is your way to go. And I have a coupon for 20% off to $189 for the year. And if you want to go in and you want to look at Snap, well, it's a hold in the quant. Why is it a hold? Well, look at the valuation. The valuation is a little bit, and this updates overnight. So it's not like it's a crazy numbers. This is updated with the current stuff. Their PEG is 2.31. They're 79% over. I don't like this one. Their growth, A-. The revisions, A-. Wall Street has it as a hold. Wall Street doesn't particularly like this one. It's 19% upside because 1347, we're already over that. Get ready for these guys to come back and probably have a buy on this one. So Snap, interesting. Again, you're Seeking Alpha or Alpha Picks. Those are the 2 tools that are there. I thought this was interesting about Microsoft. Oh, one thing that I'm going to do on the paid newsletter, we talked about Snap, but on the paid newsletter this weekend, I'm going to look at a legendary investor. Not going to tell you who, but it is the person who identified to Warren Buffett about holding on to your losers and cutting your winners. It is like watering your weeds. Cutting your flowers and watering, what is it? Cutting your grass and watering your weeds. It's that guy. And I'm going to highlight the fundamentals that he said he won't buy a stock with. PEG is one, PE another. So I'm going to highlight that legendary investor. I'm going to highlight the fundamentals that he goes over and explain those fundamentals. The other thing I will include are 9 AI prompts that will help you become a successful trader in the market. Again, these are prompts. So it is handwritten for you. I found these yesterday and I think they're good. I will include those 2 things in the paid newsletter if you are not a paid member of the newsletter, or if you're remember, the newsletter is free. It's 100% free during the week. The only thing I charge for are the weekend newsletters. And the weekend newsletter, it's a good way to help support me because, again, at some point in time, I'm going to go, I had a great Q1. But this is a great way to help support me and support the 6 to 8 hours a day that I do in order to get this content out to you guys. But again, it's the newsletter. Microsoft. I thought this was great. Microsoft key guidance. Stock is unchanged after the guide up 4% in after hours. Expect Azure growth to be 30 to 31% year over year, similar to March quarter. My take, holding growth rate steady off of a higher number is a win. And this is why it's not up, but it's a huge win. Number 2, expect full year 24 margins to be up 2% year over year despite increase in AI investment. My take, same thing that Google said. They're going to spend for AI, but they're going to monetize it way sooner than anybody who's smaller. Full year 2025 should see double-digit revenue growth and operating margins to be down 1%. So they're cutting costs, but increasing revenue. Revenue growth guide is in line with expectations that call for 14% next year compared to 15% in full year 24. The margin comment took some of the air out of the guidance, which misses the point. Microsoft is making a massive AI investment, and operating margins are only declining by 1% is a positive. That is the big thing. I don't think Microsoft is getting credit for what they're actually doing. The stock, it was at $425 yesterday. It's at $413. I still say if you can get this around $400, that quarter was so good, I think it's worth the $400. Honest to God, I think it's worth the $400. Yes, I put a ton of money into this. And yes, I think it's a good thing that they put out the earnings. Copilot is going to be huge. I think this continues on its trajectory up. Do we have a pullback here? We do. We have that little downturn. This week is down. You opened at 400. Yesterday, you closed at 399. Today, you're opening at 413. This is going to be a green candle. So by the end of the day, I expect this to be a green candle. I don't expect this to go down below 400 today. I just don't. And if it does, I think it's a buying opportunity. I think we've clearly got this upward trajectory. Now, they had high expectations. I think they met it. If you want to see what the expectations were, go over to Earnings Hub. And again, these are tools that you should be bookmarking and looking at. Earnings Hub has the Microsoft earnings. Look at this. Expected $2.82, reported $2.94, a 4% beat. Expected $60 billion, reported $61. This should be up huge. You can view the full AI summary. This is a great summary of the call. Again, this is all free. This is at earningshub.com. I really, really like this site. I think it's fantastic. I don't know when they're going to start charging for it. They already have, hey, get it for a year for $1. Probably makes sense for me to pay $1 to get this for a year. It really does, to be honest with you. I don't have an affiliate agreement with them. These are the guys from Savvy Trader. They took it away from Savvy Trader and put it over here. I really, really like this. And I think this highlights exactly how good that quarter was. You can see Microsoft's quarter is a drop the mic moment as Azure AI lead the way. This is 100% the drop the mic moment. So I agree with Gene Munster. I agree with this analyst. I think Microsoft is a buy right here. I won't be adding more right now. Again, waiting 3 days for the thing. But I am actually thinking at this point, unless Apple comes out with something in June, I may start in my retirement account whittling down some of the Apple and moving to Microsoft. It was that good of a quarter. The other one that had a great quarter is Alphabet. Alphabet, I saw it, hey, we're getting out of our teenage years and we're becoming adults. Google, Google, I was saying Alphabet, but I still call it Google. YouTube, incredible. YouTube beat, search drove. I still say there's a risk on this one, but it's not a huge risk. And we can take a look at Google in the quant. It's a strong buy. And remember the quant, if you want how the quant ratings beat the market, just go and read this. This is number 1, and it just turned to a strong buy. Its valuation is a D, but let's look at the PEG ratio. The PEG ratio is a C. It's only 4% above its sector median, but these guys deserve a multiple that is significantly higher than what they're being paid, what they have. So I do think this one is a buy here. Now, do I buy it today? No. At 175, I wait for this one to settle down. This one's going to gap up. Remember I talked about Snap having that gap? This one's going to gap up here from 157 to 175. It is now 919. It is not going to drop down to 157. I don't think you trade to 157, so there will be a gap here. And so that gap will be something that will be probably revisited. But this quarter was that good. This quarter was amazing. Now, let's talk about that versus Meta. Meta had a great quarter, and we can go over here let's go to Earnings Hub first, because if we look at Google, and we highlight Google here, the expected was $1.51. They beat it by 25%. The expected revenue, they beat it by 2%. You can read the view summary. Now, here's what I want to point out. Meta yesterday, look, they beat it by 9%, and they got killed. The reason was spending. Now, Alphabet brought up the spending as well. They're up 11% in pre-market. Meta is down 0.454. I'm waiting for this to settle, but I think anything around this 200-day right here is a fine buy. I don't think that they're overvalued. We take a look at a weekly. This was due for a pullback. Look at the weekly candle. The weekly candle just got down there. If you want to look for the extreme kind of support, it's 389. Now, it hit yesterday. It went down to the low yesterday, 414. It didn't make the 300s. 414 is as low as it went. I think it may have been 300s in the pre-market or post-market after the earnings, but it got 414 during the period yesterday. This is still a buy. This is still, with the TikTok ban going on, with them spending, I don't think Zuckerberg's, it's different than, they got dinged because Zuckerberg's spending. And Zuckerberg spends $10 billion on the metaverse where 30 people went. You would have been better off handing people $10 billion and just saying, here you go. And then you would have gotten lifelong customers. Meta, it was due for a pullback. Look at that. You look at Google. Google has been super strong in this pullback. I mean, you look at a weekly of Google, and they have just skyrocketed past their all-time high of 150 again. Look at the weakness that we saw at the end of March, and then Google has just been perfectly happy going up. Perfectly happy going up. And the reason is YouTube. The reason is search. The risk for Alphabet is that their engineers are leaving, and it doesn't need to be one person that take one AI company that takes away their search revenue. It could be 30. Could be 30 of them. So you do have some risk in that market, but I do think this one, again, is a drop the mic moment. I think it's going to be fine. Now let's talk about earnings. Microsoft beat, Google beat, Roku. Roku killed it. And I'm not a big fan of Roku. I think it's overvalued. I think the platform sucks. It's down 3.171%. This was up. I think it was up almost 10% in pre-market yesterday when they announced. I just, you take a look at this, and we'll go and we'll look at Roku here. There we go. There's Roku. They beat. They're down. They beat by 42%. 42%. Now, they lost 35 cents. This is higher for longer. This is the problem. This is 100% the problem. They're still losing money. And they don't have a pathway to actually make money. So, again, Roku, it's higher for longer. Now, one that I do own, and I know a lot of you own, many of you may have followed me in there because I bought $25,000 worth of this, 46 the last earnings. It's Intel. I'm throwing Intel with the PayPal. I'm getting out. I think I've lost like 20, 30% on this one of the $25,000. So I'm just getting out. It just needs to be lost. And the reason is these charts. Now, if I bought Intel at $35, I'd probably be a little bit happier and less antsy at 32. It's trading at $32 right now. I'm going to get rid of that position. I'm going to move this to a winner like AMD, like NVIDIA, like SMCI. I'm just moving to a winner. It's done nothing but lose me money. Revenue growth year over year, down 14%. If we go to Earnings Hub and we look at Intel, here we go. Intel, what'd they do? They beat by 28%. Great. But they missed their revenue. And what are they expecting? Again, look at these charts. It just doesn't look good. Versus an NVIDIA, versus an SMCI. Look at those charts. So I just want to get out of this one. I just don't think that it's worth it. In my mind, it's just, it's nothing big. Now, if we go over to Earnings Hub and we look at Exxon and Chevron, they both beat. They had mixed results, though. This one, earnings per share on Exxon, they met on earnings per share. Maybe, the whisper number was a little bit higher, so they maybe missed. Revenue killed it. Revenue absolutely killed it. Now, if we look at Chevron, I think Chevron may be the better buy. They beat by 9%, and they beat revenue by 2.93. I think Chevron, if we go over here and I'll look at Exxon first. We'll look at Exxon and as far as the quant goes. It's a hold. It's a buy on Wall Street, but it's a hold. Both of these, by the way, were hurt by lower natural gas prices. And that's one of their main problems is lower natural gas prices. It's not oil. Both of them have said, hey, there's nothing but upside with oil. Even if the Middle East conflict expands, there's nothing but upside. Now, what I want to point out is Chevron is trailing Exxon by quite a bit here. Look at that over a 3-year period. This is why I think Chevron might be the better buy. And if we go and we look at, if we look at the peers of Exxon and we just kind of, here's Chevron. Okay, so it's got Chevron right there. It's got Shell. If you look at the Wall Street analysts, about the same amount, copy it. You look at the total. Just look at total return, because they include dividends and they're big dividend givers. You look over 1 year, Exxon's up 6%, Chevron up 1%. You look over 3 years, you can take a look at these others as well. I mean, look at Exxon up 144%, Chevron up 83% over 3 years. You can look at Total Energies up 82%. They're by far the leaders in these. Same analyst recommendation, same thing. Exxon is ranked 54 in the quant, Chevron 64. I would argue that Chevron probably has the bigger opportunity to grow. We look at some of the dividends, some of the dividend grades. We look at these full year. Look at the PE, 12, 11, 12 versus 11. I think Chevron has a better opportunity. You look at the gap, the forward gap, 13 versus 12. You look at the PEG ratio, the PEG right here. It's 2.3 versus 2.91. Again, I think the growth, you can look, revenue growth year over year, down 15%, down 17%. But both of them, the other point that I want to make is when we look at the year-to-date returns and you look at the S&P the top returns, look, Constellation Energy, it's energy. NRG Energy, it's energy. Marathon Petroleum, it's energy. Diamondback Energy, it's energy. So of the top 10, 1, 2, 3, Is Target Energy? I think it might be Target. Let me see. TRGP. I don't even know Targa. I probably should since it's one of the big ones. Yeah, it's oil and gas. So you look at these year-to-date returns. 1, 2, 3, 4, 5 of the top 10 returners are in the energy space. If you don't think energy is driving this market, and that's with lower natural gas prices, again, you take a look at this list. It's energy. So I want to mention SMCI. SMCI is trading right now at 804. If you can get it at 800, I think it's a good buy. I don't think it's overvalued. We can go over here to Seeking Alpha, and this is what you can do with Seeking Alpha Premium is you can go to SMCI. If you have Alpha Picks, you can read all of the analysis on stuff. In fact, they have a great analysis from Steve Kress about why it's not overvalued right now and why the pullback is a buying opportunity. It's ranked number 1 out of 28. When you look at the Wall Street analyst, we can look, the actual average price target is 971. That's a 23%. Again, over the last 90 days, 18 analysts, seven of them say strong buy. Now, when you look at the revisions and we look at the earnings per share revisions over the last 3 months, 10 of them are up. 10 are, there's no down. No down. Nobody's reduced it. So I think this one's interesting. SMCI, it doesn't have you in as far as the algorithm goes, but it will probably today. That's why I'm bringing it up. Again, we closed yesterday at 787. It's at 800. It's up 1.6. I would expect this one to probably be up today. It's a Friday. I will probably be adding to this today just because the algorithm will get up. And have I mentioned Dell lately? Again, bigger spend from AI benefits Dell. We're up 1.47. It's at 126. I know I pointed this one out at 121. I bought back here at 113. Yeah, it wasn't fun when it got way up here to 132 and then pulled all the way back to 113. Wasn't fun. Didn't add more. I will add more. We're opened up now. Dell is up 0.57. Market's pulling back a little bit. This one at 121, great buy. Great buy. I do think that one's a good buy. So take a look at those year-to-date returns. Look at this. This was interesting. Since October 22, every time the percentage of stocks in the financial sector above their 50 SMA fell below the SMA, it has been a reliable risk on for XLF. Set real-time alerts. This is one of the benefits of Trendspider. You can set those real-time alerts. So you don't have to sit there and look at charts all day. That's XLF. Let's go and look in the algorithm. Where does XLF fit in the algorithm as far as the chart goes? Well, XLF, we've had a nice little pullback here, looks like. XLF had you in at $40.60. You're trading at $40.75. So now if you look at a weekly of this one, again, it's very similar to the last few charts that we looked at a weekly. It's got that nice little pullback, but it's got confirmation over the 9-day. This could be setting up for a nice little move. I said it before when we were here. This $35 was a great opportunity to get in. And look at how far it's come. So XLF, interesting. Use your tools. Shep, it feels like the rug is being pulled out from under AI. It's super annoying how short-sighted the market can be. Holding my SMCI and NVDA for a longer period, but this white knuckle shit is... No. Shep, you may just be impatient, okay? What I want to point out to you is, and it goes back to Dan Ushman, look at the weekly. Go and look at the weekly charts of these stocks. They are still fairly good. Yes, we should have pullbacks. What I want to point out to you is Apple. Okay, Apple is one that I've held for a very long time. There are many times that you could have traded out of Apple. And yes, it doesn't feel good that it's down year to date. I still think this is one of the leading companies. 60% of my portfolio is in Apple. I think it's like down to 50 with the pullback. But again, it's Apple. I had plenty of time to pull back. This isn't a rug pull. This is simply the market being the market. Do you want to buy Apple? I think it's a good opportunity to get into Apple. I bought more, I told you, about 3 weeks ago at 171, a bunch more at 176 for my parents' portfolio. Patience. Shep, it's not about, hey, oh my God, SMCI is down today. I should have sold yesterday. You've got to identify what your goals are. If your goals are long-term, it's patience. It's not rug pulls. It's nothing of that sort. If you're in GameStop, yeah, it's a rug pull. If you're in DJT, yeah, it's a rug pull. But with stocks like SMCI that have good companies, with good earnings, with good products and good management, it's not a rug pull. It's simply the market saying, hey, I want to take some profits. And it's the big money, but I wouldn't call it a rug pull. It's just, it's people being solidly fundamental about where they're putting their money. But it's all about patience. AJ Burrows wants me to look at DraftKings. Anybody look at the draft last night? I'm pretty pissed off about how the Giants handled it. And Buffalo trading twice out of the first round. I get no. And trading with Kansas City out of the first round. And they get a great wide receiver. That's crazy to me. That was nuts. That just, oh, God, I don't understand that thought process. DraftKings algorithm probably gets you in today, 41.20. If we look at a weekly of this one, I've said this before, $30 was the buy in and buy out. You're trading around that 200-day. Yes, since April 19th, you've been putting in kind of the support here at the 200-day. Do you get under it? I don't know. I mean, March Madness is behind us. What's the next big betting event? I think with this one, it really determines about, hey, are they profitable? They have earnings coming up on April 29th, so it's next week. You had the Golden Cross on the weekly. You've had a nice little button hook. If these guys come back and they are positive cash flow, because they were expecting in the first quarter to be positive cash flow, then I think you get a nice little pop in this one, and it continues up. Now, earnings revisions, 18 have said up, 4 have said down, 29 have said up on the revenue, 1 have said down. So if we look at the summary of this one and we look, it's a hold, and the reason is the valuation. It's growth. It is a problem. Again, these guys spend so much money to bring in new customers. That's been the major problem. Profitability, D-. Their momentum, they have so much momentum, and their revisions, super, super positive. Listen, I own this one. I've held it. If it dips under 40 again, I may just start to sell it. I think I'm in it like 26. But remember, when it went to 26, I was buying at 26. I think it went down to like 21 after that. So again, I would say patience on this one. It's not making money. Higher for longer hurts them. Patty from Facebook. Which one is worth keeping, PanW or Zscaler? I don't personally own Zscaler. I do own PanW, largest one. I don't know whether it's PanW or CrowdStrike. Those are the two that I would worry about, that I would really kind of compare. But if we look at PanW, and then we'll just take a look. Let's just look at their peers, PanW. It's a hold. But, follow Nancy Pelosi into this one. I think that's the one you want to follow into. So we're going to edit this symbol. You know what? I'll just leave them in here, because I think all of these are pretty good cybersecurity stocks, to be honest with you. Let's look at the total return, because I do think that Fortinet may have a dividend in theirs. We can look at 1 year. PanW up 58%. Zscaler, 90%. We can look at 6 months because, PanW just has not been doing very well in the short term. Let's look at 5 days. Is it going to pull it up for us? There's 5 days. PanW, 3%. Zscaler, 3%. They're about the same. If we just look at 1 month, and we can look at the 1 month, hopefully it pulls up. But you can see the one that is a strong buy in the Wall Street is CrowdStrike. And I think they're expecting something with CrowdStrike. CrowdStrike's not making money. Here's the 6 month. PanW's up 22%. Zscaler's up 16%. But I think in the short term that PanW has a little bit of a problem getting up, because remember their last earnings that they said that there was a slowdown in cybersecurity, and then CrowdStrike said, hey, hold my beer. We haven't seen a slowdown at all. And so that's where you got it. 1 month return here. PanW 1.5%. CrowdStrike has been hurting. Fortinet's been hurting. ServiceNow has been hurting. Is that now? Yeah, ServiceNow. I don't know why they're in cybersecurity, but Zscaler hurting the worst. So does Zscaler have some stuff to come back? Nobody has a dividend. I was completely wrong. Look at the PE though. PE of PanW 52. Zscaler 63. Let's look at that important PEG. The forward, 2.11, Zscaler 1.57. CrowdStrike 1.9. So their growth is going to continue to go. Zscaler is the one that's actually trading higher based on growth. And look at the growth year over year. Revenue 22%. Zscaler 40%. CrowdStrike 36%. So Zscaler's been the biggest one. If you look at the performance, here's the 1 month performance, 3 month performance, and 6 month performance. That's where you really see Zscaler kind of pulling up. Short term, they're just not doing anything. Year to date performance, look at that. PanW's down 2%. CrowdStrike's up 17%. Zscaler's down 20%. So I don't know which one's going to be better for you. I personally hold PanW. And I've been debating. I do hold CrowdStrike as well, but I hold PanW and CrowdStrike. Those are my two picks. I don't know that I'm right. My dad has Fortinet, and Fortinet's just done nothing. I traded in and out of Fortinet. Alex, what are your thoughts on ALAR? It's going to up a bit recently. Let's see. ALAR is Alarum Technologies. What the hell is ALAR? Let's see. It is a software company. It's not making money. $5 million loss. 186. So this is a small company. 6 million shares floated. There's no reason. What's your attraction to this one? Let's look at ALAR and Seeking Alpha. Because are they covered by the quant? Let's see. Summary. Yeah, it's a strong buy. I mean, I don't know what the attraction to this one is. It's got a C on valuation. The momentum and revisions probably. Let's see. Let's see the revisions because one person. I mean, it's not covered. It's just not covered. It's one analyst that covers this thing. It's super, super small. If we go and look at the chart and you wanted to trade this one, let's say run. Let's see if we can run this. There we go. The algorithm makes you 232%. Buying and holding makes you 332. I mean, I don't know anything about it. I can tell you they're losing $5 million. They have cash on hand of $1.69. They're losing $5 million and they have somewhere in the neighborhood of $8 million of cash on hand. Now, if it's good, maybe I just don't know about it. But I can't imagine. I mean, go and read these Seeking Alpha analysts. It's ranked number 1 out of 46 in information technology. So the quant likes it. Positive. I just can't, in looking at this, there would have to be a different story for me to say, oh my God, I really like this one. Right now, I'd say, it's not my thing. Dex, what are your thoughts on Semiconductor and SoFi before earnings? On Semiconductor, I don't know anything about. Let's see. We're going to look at on. Oh, why is it doing this? Oh, come on. There we go. We're going to look at on Semiconductor I think any semiconductor right now, to be honest with you, this one's going down. I mean, year to date, God, what do you have a semiconductor company poised to rebound? It's a hold. It's momentum and revisions. That's what it is. The revisions, one revision's up, 25 down. 0 revisions on revenue up, 28 down. If you've got a semiconductor company that's going there, I don't want to own it. Why not get one of the ones that's actually winning? Get Taiwan Semi, get SMCI, get Qualcomm. You can get a bunch of other names that are actually performing well. I mean, again, that chart doesn't look, good to me. Now, SoFi, I've said $10 stock. I mean, this is one that you just trade within a range. You can clearly see a range. Now, this one has a gap up here to 857. Do you get up there? I don't know. I mean, their earnings are going to be important. I've pointed this out, that this range right here between 685 and 899, I mean, that's a range you can clearly trade in many, many times and make money. That's on a weekly. Now, if we go over here to and look at SoFi on this one, and Dex, you should have Seeking Alpha if you don't. Look, profitability is an F. I mean, that's it. It's just on the financials. So when do these guys actually start turning a profit? It's expensive. That's what you want to do. Aristotle from Aristotle 3 from Spotify. Gary, when you mentioned you got 6 figures in Microsoft the other day, I did some research and got 44K of Microsoft at 400. Great earnings today. Cheers, Jeremy from SoCal. Jeremy, that's nice. I should have a nice tip coming from there. If you want to just say thank you right here. I've got PayPal. I've got Venmo. I've got Cash App. It's all down there if you want to say thank you. But yeah, Microsoft, I think you're fine. I mean, at $400, I just think that right now it's at 407, so it's only up 2%. We've seen this like kind of pull back. I can say it on the weekly. My thought is that your name Aristotle on Spotify makes me think you're smart for listening to me. Share my expertise with the world, Aristotle, please. Please share that. But yeah, look, weekly. I mean, we've got. I've always said this. You've got to have some pullbacks for a healthy market. This is a pullback. Look at this July to October to September where it went down. I think that's what you're starting to see now. You don't have confirmation. I don't know that in the short term this was a great buy. I do think in the long term this is 100% a great buy. So let's talk about scans. First one is Qualcomm. We talked about on semiconductor, why you wouldn't just get Qualcomm. Qualcomm has been on a tear. And if you look at that weekly, that line that I put in there at 191, that's the all-time high. I think you're heading back there. I think you've got confirmation. I think this weekly pullback was a good one. I think we're starting to see the semis take off again. Right there. NVIDIA has a cross up. I will be buying more. It's up 1.38%. It's got a buy in the algorithm here at 826. It's trading at 837. I'm just going to buy more. Algorithm makes you 323%. Buying and holding makes you 341%. You know what? I'm okay giving up 20% with the 20 positions that I trade over 24 months. It provides me safety, so I'm not in that big downturn. I am okay adding to this one, probably holding on long term. Occidental Petroleum, we had a cross up here on Exxon, Taiwan Semi, Uber, DocuSign, Broadcom, XLB, all of those. What I really want to point out is the levered ETFs, because the levered ETFs are telling us, remember, we got in TQQQ. There was a cross up there. I think we're still in that one. We'll take a look. Mag S. This is the Magnificent 7. Got you in here at 36.39. You're trading at 38.45 on a Friday. Sell it. Got you in. There's another MACD cross up. I think you're going higher. I think you take the profits on a Friday. I think you buy back in on Monday. Mag S, you don't want to take that chance. USD. This is the ProShares Ultra semiconductor, so it's triple levered on the semiconductors. 83.60. You're trading at $85 right now. I think you've got an upturn in this one. I think that if you're looking, you don't want to buy NVIDIA outright. You don't want to buy Qualcomm outright. You're looking at on semi. Why would you do that? Algorithm makes you 255% over 24 months with 25 positions. You only make 215%. I don't suggest that you day trade this one because remember, it's triple levered on a daily basis. But this one, again, 255%. Mag X, I think this is the 2 times levered. Magnificent 7. This one makes you 2% versus the buying and holding over 56 days because it just came out 56 days ago. You're down 6%. So again, 24.29. Remember, it's levered on a daily basis. That one's an interesting one. If you did want to bet on NVIDIA and the algorithm being in the right place, NVDL has an entry here at 33. Now, you make 416% over 16 months. It's only been out for 16 months, 13 positions, so not even once per month. It's a trade. You win 33% of the time, but your average win is 17%. That's when NVIDIA goes for a run. It typically runs for a good time. 33.54. Again, you make 416%. Buying and holding makes you 661%. But I'd give up that 200% just because past performance doesn't indicate future performance. And there's a safety factor there. So if you have any questions, you can hit me up. Here's the link tree, linktr.ee. Everything's here. If you want to sign up for Trendspider and save over $1,000, you saw my 4-hour algorithm. You saw the charts. It's all there. It's all there for you. You get all of this when you sign up. You sign up, go to this plan. You sign up for either the yearly or the monthly, either one. And you can try out the monthly for $149. If you don't like it, you don't have to keep it. I signed up for the yearly because, again, it's $699. You're saving $1,000 off the yearly subscription. That savings is phenomenal. And if you can't make $58 per month using my algorithm and other the custom watch lists and the scanners, come on, you're out of your mind. If you want that one. Now, if you're just doing research on the fundamentals, then Seeking Alpha Premium is your thing. And I've got a coupon for $50 off, $189 for the year. You can see everything that you get. Just go and click on it in the link tree. You get a free 7-day trial. Now, one you don't get a free 7-day trial on is Alpha Picks. We went over. It's just one of the best portfolios where they provide you everything to buy and sell. And it's just twice a month. So if you don't want to do the research and you just tuned in and you enjoyed this content because I was talking about going balls deep and stuff, yeah, then just buy Alpha Picks. It's nice and easy. And they give you an easy way to look at the market. I will talk to you guys Monday. Tomorrow, paid newsletter. Anybody have any questions, you can hit me up. Okay. And remember, rate me. If you listened this far, there should be 5 stars on that Spotify, and with Apple, you should just go and find 5 stars. That's how you can support me. Okay.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.